Good day, crypto trader. Bitcoin price testing key $20,000 level ahead of crucial Fed meeting. Bitcoin price got slaughtered, with its most significant decline for 2022. BTC price saw bears pierce through critical support levels and breaking the backbone of any bullish resistance. Expect to see a further drop as the earliest support is sub $20,000. Update: Bitcoin price has not caught a break in the past week, with Wednesday's dismal price action making it the 8th consecutive day trading in the red. BTC has tested the psychological $20,000 level during the European session, but the bears have not been able to break it in the first attempt. The cryptocurrency bloodbath continues as now giant hedge fund Three Arrows Capital is suffering from the consequences of the Terra and Celsius network fiascos. Added to the heavy downside pressures from the heavily leveraged cryptocurrency market, the huge risk-off mood dominating financial markets is also penalizing BTC. The Federal Reserve Board is meeting on Wednesday, with 50 to 75 basis points rate hikes expected on the menu. More importantly, the Fed will also update its dot plot, its future rate hike projections, and any hawkish changes to an already pretty hawkish outlook or any pessimistic words from Chairman Jerome Powell will probably keep decimating high-risk assets like equities and cryptocurrencies. Bitcoin, BTC, price is in a tight spot, and subject to some ferocious moves in markets where every asset class has seen outflows of money. Unfortunately, risk assets like cryptocurrencies and stocks have sold off more than bonds and commodities, with only one victory in the forex market, the US dollar. Apart from some dip buying, which is not likely to be a match for the current bearish pressures dominating markets, price action is likely to simply run further down as the predominant themes are unlikely to fade anytime soon. Bitcoin's pain has only just begun. Bitcoin price fell on Monday after dollar strength continued from where it had left off on Friday. The squeeze could not have come at a worse moment, as just when people were starting to forget about the Terra Luna debacle, a new scandal hit the wires after a crypto broker had to report that a blocked order created a backlog and made it unable for traders to exchange cryptocurrencies for dollars. This sparked mayhem and panic in the asset class, with questions quickly raised about whether another Luna scenario was unfolding or if a default was at hand. BTC price saw two strong fundamental drivers, therefore, pushing price action to the downside, and broke below $24,000. With the close below the monthly S1, the only possible trade now is a rejection after a retrace back into that S1, and then a drop back to the downside in search of support. The nearest support is $19,036.23, meaning the $20,000 barrier could give way. On the other hand, in the event of a rebound and bulls jumping in at the current low levels, a close back above the monthly S1 and $24,000 could quickly open up more room to the upside. That would mean a return back to $28,695.13 and, with that, an erasing of the move from the past weekend. Should the Fed and the BO help soothe markets by changing their tone on inflation and proving they are doing an excellent job in taming it, expect to see a possible return to $30,000 by next week. These are the price targets for another correction ahead of Cardano's ADA. Cardano price drops below 40 cents as Bitcoin drags cryptocurrencies into recession. ADA price sees traders holding their breath while avoiding new lows for the week. Expect a 20% decline on the back of the Federal Reserve statement later today. Cardano, ADA, price keeps its together quite good this Wednesday as other major cryptocurrency pairs are nearing key levels, with Bitcoin flirting around $20,000 and ETH nearing $1,000. Markets got blindsided by an emergency meeting from the ECB, hinting that Frankfurt is seeing issues in the rising spreads from Italy after they announced stopping with their bond buying program as of July. With traders on edge, ADA price is refraining from making new lows for now, but the Federal Reserve meeting later today could be just that one event too many in order to keep price action in check. ADA holds it together for now, with traders on edge. Cardano price sees mayhem in the markets this Wednesday with surprise meetings from the European Central Bank just hours before the Fed, the U.S. central bank, is set to become more hawkish as initially perceived. Traders, however, are keeping their act together in Cardano as it refrained from making new lows while Big Brother Bitcoin is on the cusp of breaking below $20,000. Eventually, the lower break should come for Cardano as most stars are aligned for ADA price action to drop lower. ADA price will drop towards 37 cents at the monthly S1 support level, which would take out the low of May 12 at $0.384. The relative strength index still has some room to the downside, opened up before hitting the oversold barrier. Expect BTC to break below $20,000, with either the Fed or ECB statement to be enough as a trigger to do so. As plenty of headline risk is possible this Wednesday, a positive surprise could bring some relief and soothe the tone in the markets a bit. That would be ideal for cryptocurrencies to move in and rally. ADA price would quickly pop back above 50 cents and swing possibly back to 60 cents before testing the monthly pivot and the 55-day simple moving average as caps on the upside. Ethereum extends its fall and hits 1010. Last Friday, Ethereum opened with a large negative gap, breaking below the key support territory of 1685, which had been acting as a floor since May 12. Subsequently, the crypto kept drifting south, and today, it hit support at 1010, before rebounding somewhat. Overall, Ethereum is trading well below the downside line drawn from the high of May 15, and well below the downtrend line taken from the high of April 3. Thus, even if the price rebounds somewhat, we will see this as a corrective bounce before the next leg south. We believe that the bears could take charge again from near the 1270 barrier, marked by the high of June 14, or from near the 1395 territory, defined as a resistance by the inside swing low of March 1. This could result in another leg south and another test near the 1010 line, the break of which would confirm a forthcoming lower low and may see scope for declines towards the 675 territory, defined as a support by the inside swing high of December 17, 2020. Shifting attention to our short-term oscillators, we see that the RSI lies within its below 30 zone, but it has moved higher and appears ready to poke its nose above that 30 line. The MACD, although deep into its negative territory, lies above its trigger line. Both indicators detect strong downside momentum, but one that has started to slow down. In our view, this adds credence to the case of a possible rebound before the next leg south. A bullish reversal will be the case in our view, upon a break above 2195, marked by the inside swing low of May 10. This may confirm the break above the downside line taken from the high of April 3 and could initially pave the way towards the high of May 10, at around 2455. If the bulls are not willing to stop there, then we may see them pushing towards the 2745 territory, which acted as a support between April 26 and May 3.